consistent with our predictions. After the $66,000 all-time high, Bitcoin finally pulled back by over 5,000 points. But the decrease in the value of BTC only lasted a weekend before returning to its upward momentum. On October 25th, many people were ready to go to work in an upbeat mood. But when they turned on their smartphones, they found that on the moving average MA5 line was beneath MA10 and a downward turn was indicated, making some investors ask whether a bearish market was coming. So in order to get some clarity on where the price of Bitcoin is going, we will analyze its contributory factors one by one. The principal reason given for the recent rise of Bitcoin is the impact of the first Bitcoin exchange-traded fund, ProShares Bitcoin Strategy ETF. When it was officially listed on the New York Stock Exchange and began trading on October 19th, the ETF was highly sought after by the market after its listing. It rose by more than 4% on the day of listing and continued to rise by 3% on Wednesday, having swelled to more than $1 billion worth of assets, making it the ETF quickest to surpass $1 billion, according to Fortune. But there are also different opinions as to the main driver of the price of Bitcoin. American multinational bank Morgan Chase published a research report last week proposing that inflation is the primary engine driving Bitcoin prices to new all-time highs, not the hype of the first Bitcoin ETF in the US. The company noted that investors are withdrawing from the gold ETF and entering the Bitcoin fund. As reported in Bloomberg, the Morgan Chase strategists cited growing concerns over inflation renewing investors' interest in assets that can act as a hedge, including Bitcoin. Gold has failed to respond to heightened concerns over inflation, and consequently the shift away from gold into Bitcoin funds has gathered steam. This flow shift remains intact, supporting a bullish outlook for Bitcoin into year-end. The strategists added. In considering this expert point of view, let's then take a closer look at the activity of active addresses in the market. This graph shows the number of active Bitcoin addresses from October 10th to the 24th. It is not difficult to see that the number of active addresses decreased initially after the Bitcoin pullback, but then the number stabilized, resulting in more active addresses. The performance on Ethereum is somewhat similar, combined with the changes in the number of ETH active addresses in the past 4 months. It is not difficult to see that active addresses are both gradually increasing and then stabilizing at a higher level, because in this current upward price action, almost everyone has made money. But from a rational point of view, if you want the price to continue to reach new highs, it will take a period of changing hands. If you can make this adjustment, you have a better opportunity to participate in the market. The underlying point is that price pullback is not necessarily a bad thing. On the contrary, there will be a pullback before the price of Bitcoin reaches new high points. It is simply a result of the volatile nature of the cryptocurrency. As a result, you don't have to be too worried in the face of the pullback. As the well-known Twitter blogger PLANB said, whose crypto forecasts for August and September were off by less than 0.33%. Everything is in the trend when using the stock-to-flow model. As reflected in the market, the price of Bitcoin has recovered from its recent volatility. The only catch is that the open futures positions data continues to show a rise, with the current CME Bitcoin futures open positions exceeding $5 billion. Judging from the previous data, it is a sign of an impending sharp correction every time this happens. Therefore, while the bulls are currently profitable, there is a thorough liquidation on the cards. Bitcoin whale account at J0E007 also said on his Twitter channel that if you still expect Bitcoin to exceed $100,000, then you should be prepared to survive the deep fall. He believes that Bitcoin will usher in a deep correction, but it is still undeniable that soon, the big positive trend will come. But before the trend comes, it needs a deep reset. Recently, the Speaker of the House of Representatives of the United States called on central banks of all countries to add Bitcoin to their currency reserve options to hedge against the coming inflation risk. While on October 26, Cathie Wood, the founder of top tech performing ARK Invest, Also stated that the younger generation no longer invests cash in consumption but repays loans and invests in cryptocurrency. Therefore, judging from the information on holding positions on October 26, the 10K, 100K whale addresses continued to increase their positions by a large margin, and the market was booming. At the same time, the latest S2F model shows from the supply delta the market entering a high-risk area that will produce volatility in the price of Bitcoin. The supply delta graph data shows that the price is still far from the top. Short-term holders continue to grow. Open positions are still high. The mid to long-term trend remains unchanged, and the short-term risks are still not lifted. On October 26th, the cross-exchange data continued to show the outflow, 20,000 bitcoins, smoothing out all the short-term inflows from the previous day, with the supply going into a downturn again. So, although the price of Bitcoin has been rising, the fact remains that fewer Bitcoins are circulating on the exchanges, and market liquidity is scarce. Coupled with high-volume contract data, this strongly suggests that the market is due a deep correction. After this correction, Bitcoin is predicted to continue rising, with the possibility that it may hit $100,000 in the coming months. Finally, don't forget to participate in Big 1's futures this week. The rules are straightforward. 1. During the event period, the number of contract transactions is more than or equal to 4 times, and each contract transaction volume is more than or equal to 1,000 USDT can meet the requirements of the event. 2. Count all registered users, the transaction volume during the event, and divide up 100,000 USDT rewards proportionally. Participating users who meet the conditions can earn a minimum of 5 USDT for individuals, and the maximum award limit is 10,000 USDT. Come and take part now.